You probably heard about critical illness insurance or disability insurance, but what's the difference between them? In this video, I will go over the CI insurance and DI insurance in Canada so you know which one to pick. Welcome back. If you're new to this channel, thanks for dropping by. My name is Thomas C. Chan. We have the most Vancouver life insurance 5-star Google reviews, and this channel is to help Canadians build tax-free wealth for their retirement and to protect you and your family using solutions that Canadian banks don't want you to know about. So enjoy what I have for you, and let's get started. Critical illness insurance and disability insurance are two of the most common living benefits available to Canadians. And so it's useful to do a comparison between them to see which one is right for you or if you should get both. Let's jump right into critical illness insurance first. Critical illness insurance is an important part of Canadians' financial planning. It's an insurance policy that pays you a tax-free lump sum amount if you develop a specific illness such as cancer, a stroke, or a heart attack, plus another 20-ish diseases or health conditions. Some may say, I'm young and healthy. Cancer, heart attack, and stroke won't happen to me. But the reality is 2 out of 5 of us are expected to develop cancer in our lifetime. And 63% of Canadians are expected to survive for more than 5 years after a cancer diagnosis. Therefore, life insurance cannot kick in yet, and disability insurance may not have enough to cover an ongoing medical treatment. So we need something in between to protect the risk, and critical illness insurance can give you the freedom to make the best decisions for your recovery, for your family, and in some cases, if the illness is life-threatening, it can help you capitalize on the time you have left. Alright, that's the essence of critical illness insurance, but what about disability insurance? According to Statistics Canada, 22% or 1 in 5 of the Canadians aged 15 years and older have 1 or more disabilities, and 1 in 3 Canadians will need to take more than 90 days off from their work due to a disability. And what's worse, the average income for people who are disabled is only half compared to others who are healthy. And therefore, disability insurance is meant to replace a substantial portion of your income should you become injured or ill, and if you cannot work, typically around 67 to 85% depending on your policy. Generally, the more expensive your policy, the more percentage of your income it covers. I get a lot of clients who call me and say they have critical illness insurance. Do they really need disability insurance as well, or vice versa? So that's actually a big difference between critical illness and disability insurance that you need to know about. So let's dive in more. First, let's talk about how the insurance payout structure. In Canada, critical illness insurance pays out a lump sum tax-free amount to the beneficiary. So say the insurance coverage is $100,000. Knock on wood, if you have a heart attack, you get a $100,000 tax-free check. And the policy will be void after, and usually it's harder for you to get a second policy since you have a pre-existing medical condition. And unlike critical illness, which provides you with a lump sum, disability insurance provides you with a consistent monthly payment while you recover from your disability or until your predetermined coverage period ends, whichever comes earlier. You can use the benefit on whatever you see fit, but the monthly payment structure is meant to mimic your paycheck and is typically intended to cover your mortgage or rent and the other living expenses while you're on the road to recover. And after you recover, the plan is still in force and you can still be able to get a second claim on the same policy. Now, please note that for CI insurance is that the more that you buy, the more that you get paid when you're sick. However, for disability insurance, it may not be in the same case. The goal for disability insurance is to replace 67% of the income. So say if you get into a car accident, the auto insurance will pay first, then your company's disability plan will kick in. Then last is covered by your personal disability plan. That's called the integrated coverage. Therefore, it's very important to talk to the insurance advisor about the detail of disability insurance. Now, how long will both CI and DI going to protect you? For critical illness insurance, usually the insurance company will offer 4 different coverage periods. We have the term 10 and 20, which cover for the next 10 years and 20 years. We have to age 75, which covers to age 75. And lastly, we have to age 100, which is to cover for the entire lives. Some insurance companies offer mid-range coverage like coverage for 25 years or coverage to age 65, but that's just a variation of the 4 general types. Now, stating the obvious, the longer the coverage, the higher the cost. But the great thing for critical illness in Canada is that once you sign up, insurance company will lock the rates for you, and therefore this price is fixed until the coverage expires. Now, let's take a look on the disability insurance. There are 2 general types of disability insurance, short-term and long-term. Short-term disability insurance is generally for 2 to 5 years, while long-term disability insurance usually covers until age 65 because technically speaking, you're retired at age 65. How about the cost between the 2 then? For critical illness insurance, the cost of the insurance depending on your age, gender, smoking status, any medical history, and your body build, while disability insurance is really keen on what industry and the income level and the waiting period, which I will share more. For example, a truck driver disability insurance will be much higher compared to an IT programmer. Let's say Tom is 35 years old, a self-employed IT consultant. If he's looking for a $100,000 critical illness insurance, then it's around $40 per month for term 20 and around $80 for age 75. Let's say with this $80 budget, what can Tom get for disability insurance? Tom can get a $4,000 monthly benefit for 5-year coverage, meaning if Tom cannot go to work due to needed sickness or accident, he will get $4,000 per month for the next 5 years, or doctors say when he recovers, whichever is earlier. And just like buying a car, you can add in other features to both the critical illness and the disability insurance. For instance, for both policies, you can add something called the return of premium. For CI insurance, say after age 75, if nothing happened to you, you are entitled to get all the money back. So it gives you the extra boost to your retirement income. This is important to business owners because we can further spin this idea to create more tax strategies around that. Same features apply to disability insurance as well. Usually, they return 50% of what you put in back to you. And I know for some insurance companies, you can exercise this option every 7 years. So this is not just a cost in your budget list. It's a really great option because it's really risk-free. Neither you need the policy and you get paid the money while you recover from the illness or injury, or if you don't use the policy and your premiums are returned to you. In essence, it ends up being a forced saving account over the long-term time with the added benefits of giving you the insurance coverage during the time of the policy. There are lots of other features like inflation adjustment, partial or full disability coverage, or protect your own job expertise, but I'll leave it in the future topics. So the question becomes, which insurance should you choose? Or should you double up and get both? At a general rule of thumb, having both kinds of insurance can be vital in giving you the best financial protection layered with a regular life insurance option. However, that may not be an option because of cost, or you may not be eligible for disability insurance. For example, seniors and people working in high-risk jobs like loggers, truck driver, and mining operators might get denied coverage for disability. Second, if you work for a government or other companies, you might have a very good employee package, which usually have a certain amount of disability insurance. And on the other hand, as the work-from-home culture is becoming more common, it's important to note people who work from home 100% of the time may not qualify for disability insurance because it's impossible for the insurance company to tell if they are working or chilling at home. For this reason, critical illness insurance is generally recommended for people who cannot get disability insurance coverage. However, with that being said, you should generally prioritize disability over critical illness insurance, especially if you're self-employed or you don't have group disability coverage. Your ability to earn an income is your most valuable asset. And should the unexpected happen, the only way to protect yourself from the financially devastating outcome is disability insurance. But please talk to your insurance planner about your individual situation and what is right for you. Because there's no assurance that you will experience a medical condition covered by both types of insurance. For instance, critical illness insurance will not provide payments if you're unable to work because of an injury that can be recovered shortly. Alternatively, you'll be suffering from a serious illness that doesn't keep you from working. For example, many people diagnosed with life-threatening cancer might only miss a couple of months of working for treatments. In this situation, they will only receive the critical illness benefit. Of course, the opposite can also happen. Major depression can leave you unable to work, which will likely be covered under disability but not critical illness. Or if you have a job where you have to stand and you sprain or break your ankle, this too will only be covered by disability insurance. So again, make sure you talk to your insurance planner. If you're interested in a free consultation to learn how you can build tax-free wealth without market volatility to protect you and your family using solutions that Canadian banks don't want you to know about, there's a link below where you can have a direct one-on-one chat with Nita, my team, and I. Hey, thanks so much for watching. This is Thomas, and I will see you in the next video.